Check, please.
Hey guys, in this video, you're going to learn about Google versus the Chinese Google, which is Baidu. We're going to go over both companies' financials, use our initial 8-pillar screener to see, are they in the wheelhouse for a potential buy? After we do this, we could possibly learn more. We'll use our stock analyzer tool to show you what price you could be paying for these companies moving forward. We're very close on some of these. So Google is incredible and Baidu is real beaten down. We'll give you our perspective on both. Paul, what do you think about these?
All right, guys, follow us on Instagram, our new Everything Money Investing Instagram account, and then follow Seth Moe and I personally because we do nice family photos and things like that, yes. Pillow fights. All right, so Google versus Baidu. What we're going to do here, we're going to use our 8 pillars tool. We're going to go directly to the 8 pillars instead of going through the whole process. We have a lot of videos. I strongly encourage you, if you're new to our channel, go look at our past videos and how we do our 8-pillar process because it really goes to the nuts and bolts of it, but our software does it for you automatically. So Google first. So this is Google. It's up a lot, $2,700. I mean, look at this 10-year chart. It's crazy. $293 10 years ago, right? And now look at it, $2,700. All right, 8 pillars. Guys, this is what I love. I love companies with a lot of check marks, but when they have 2 X's and they're both value-oriented. The 5-year PE is high, and the 5-year price of free cash flow is high. This is the valuation mark. What this means is all the other checks are great fundamentals in the business. It's just selling for potentially too high of a price. Is it for sure too high of a price because of the X's? No. Because if a company is going to grow, 2 companies are exactly the same. Company A and Company B have everything exactly the same, but one's going to grow 30% and one's going to grow 5%. You should pay more money for the 30% growth. Growth is an important aspect of value investing. So, can Google, if Google's going to grow 50% a year for the next 10 years, I would absolutely buy it all day today. All day. I don't even need to do the stock analyzer tool. I just know I'm going to, right? Now we're going to compare it to Baidu. So let's look at Baidu real quick before we run our stock analyzer. So again, we go here, go to Baidu. Oh, wow. Look at this chart.
Yes.
Wow.
Sheesh.
This thing is
Chinese company?
The
Chinese Google?
$340 down to $153.
Now, this has to do a lot with the Chinese issues with crackdowns and them charging more tax based on technology businesses, blah, 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 blah. We saw the same thing with Alibaba. We saw the same thing with every Chinese stock out there. They've fallen a lot, correct?
Yeah.
Okay, so the 8 pillars tab, not enough data. So that's the other issue we have. Well, they do have enough data, but it's, okay. Oh, wow, I'm actually surprised by this. Revenue has been pretty flat for 3 or 4 years now. Interesting. Go look at Google's revenue growth.
It's got to be colossal, right?
Oh, yeah.
Oh, yeah. 107 to 239. Holy cow. Okay, I'm already liking Google more, even if Baidu's valuation is, let's see, their free cash flow. Let's look at their free cash flow. So the thing about Chinese stocks, guys, is they don't report every statement every single quarter. So we get a data feed from a very reliable source, Morningstar. So if they don't have it, we don't get it. But their annual numbers are accurate. And their annual free cash flow has averaged $2.3 billion a year. And they're selling for $53 billion. That is, what's 53 divided by 2.3? Calculate. 53 divided by 2.3. It's selling for 23 times 5-year free cash flow. Google is selling for 50 times. But Google has a lot more growth going right now, and they are the #1 search engine in the world. And they own YouTube. So let's do our stock analyzer tool for both of these. Stock analyzer. Let's go to 10 years. All right, Google revenue growth. I'm going to go, it's a big company, so I'm going to go a lot lower. I'm going to go 8%, 11%, and 14% revenue growth. Profit margin. I'm going to stay in the 21, 22.5, and 24. Free cash flow margin, I'm going to do the exact same thing. PE. Now, guys, this is where everybody's going to hate me. I'm going to do 13, 15, 17. And guys, the bigger the company gets, the slower they grow, the lower the PE needs to be. And just like all the time, I do 12.5% desired return because, guys, if you're going to invest in an individual company, you should get the good margin of safety and make it worth your time because you can invest in an ETF and get 9 or 10%. So don't just invest in a company for 10% return. Hit the analyze button. Okay, it's expensive. Low price of $1,240, high price of $2,500. So even if it goes down another 10% from here, it's still at a price where you have to believe these growth numbers. 14% with 24. It's a little bit aggressive. My goal is to buy companies that I love at prices that make sense below my assumptions. So I'm looking for Google to be in the low 1,000 to mid to 1,500 range, right? So that's where I'm looking at Google right now. Any questions, Seth? You're looking at me.
Well, I was explaining this concept to actually a family member recently. Find a great company and find it cheap. And when you get antsy, that's okay. You have to start living with that feeling of antsiness that I'm not buying, I'm not spending. How patient can I be? How many years can I wait before something falls into my wheelhouse? And we're doing all this to just minimize downside risk, right?
Because everybody doesn't remember that. In investing, the biggest issue you have is an upside. The upside will take care of itself. It's avoiding the downside potential. And the more margin of safety you have, the less chance of a downside potential. And that's the true definition of risk.
Mm-hmm.
All right. So,
Baidu.
Now, let's go to Baidu. Let's do the stock analyzer tool. 10-year analysis. Now, I will say, with China, with a faster growing middle class and more people coming out of poverty and getting computers, there's probably more growth potential for Baidu than Google, right? Even though we've seen very little growth in the last couple years for their revenue. So let's go 10, 13, and 16. I'm making the low growth higher than Google's low growth potential. Profit margin, boy, their profit margin is decreasing. Let's go 14, 17, and 20. Free cash flow margin, we'll do the exact same thing. PE, I'll do the exact same thing as Google. Well, actually, I'll do a higher PE than Google because of the fact that they have more growth potential because of being China. And 12.5% return again. Hit the analyze. Oh, wow.
Give it to me now.
All green.
We're seeing that with lots of these Chinese companies, though.
Yeah.
Where they're all green.
Because they've fallen so much.
Yeah.
Wow. So, guys, I stand corrected. Maybe I don't like Google as much as Baidu. Interesting.
Now, just being your pal and consigliere, Paul, it doesn't seem like you ever have shown a passion toward Baidu.
No, I haven't. But
right. So
doesn't mean it's bad. It just means that
could you start falling in love with it if you...
Well, I know that now I'm probably going to start doing more research on Baidu.
And I guess that's the point, folks. If you're watching at home, a lot of other YouTubers tell you that for some reason you're spending a long time researching these companies before you ever even look at financials. And so we do the reverse. We look at, wait a minute.
By the way, we and every smart investor of all time does the reverse.
That's right.
But Tom Nash, Meet Kevin, Stockmo, they do the opposite. So would I rather be in the same category as Buffett, Munger, Klarman, Howard Marks, or would I rather be in the other morons categories?
Well, when you say it quite like that, yes.
Can we make my hair green so I can look smarter?
We can. We'll work on that in post.
All right,
yes.
sounds good.
Okay. So yeah, I mean, so now that we've seen that it's all green, what steps would you take to get further?
Are we for sure that this is like the search engine in China?
I don't know.
Yeah, see, that's what I would want to know. Like, is this like a DuckDuckGo? Or is this...
Oh, DuckDuckGo.
Or is this like Google? And you know what I'm saying? So that's what, like, yeah, it falls into.
And by the way, you can find that out probably pretty simply.
Paul, if a viewer out there was now maybe intrigued by Baidu, what are a couple steps they can take to learn more about it?
I mean, go find their version of an annual report. Go to our community and start talking to people about who've done research on Baidu. Just anything you do for Google, do for them. Like, my thing is, Google's so ingrained in our lives. Is Baidu the same thing?
Yeah, do they say go Baidu it?
Yeah, Google is just like, nobody says I'm on Bing. I don't even know anybody who uses Bing. I only use Bing by accident. When I'm on Edge and I happen to type something, like, oh, look, I'm fine Bing. I'm fine with that. But other than that, it's Google. YouTube. There's the two top search engines in the world, Google and YouTube. Google owns YouTube. That's where I sit there and go, boy, I would rather, I don't know.
Yeah, Google just seems like this juggernaut that how could it be stopped?
For me, it's
yeah. I mean, Baidu's interesting because it's all green, but at the end of the day, if there's too much competition, because technology can change a lot, especially in a country like China, if they get the right momentum going.
So something else about Google. Google's not just Google search engine. Google's also ingrained in our homes. I mean, we have Nest. You have the thing that you talk to. You have the security system. You have everything. Everything is Google.
Yeah, I mean,
you can have a Google house if you want. I bet you can't have a Baidu house.
I mean, they got obviously the email rules my life, and
it doesn't mean that Baidu isn't a good buy. It's just a matter of You have to do
Just-
your research and
yeah.
make sure you understand what's going on here.
Not at all.
If you want the software behind Paul to make better researching decisions and financial decisions with your money, you can have it. You can have it in the palm of your hand. Paul, tell them how.
So guys, we created the software because our subscribers were sick of waiting for us to make videos and they wanted to be able to analyze their own stocks on their own. So we created the software. We put it all on your mobile phone. So everything you saw in the video is available on your mobile phone in full. You get 30 years of financial data. You get access to Seth, Mo, and I. You get the full 8-pillar analysis. You get the full stock analyzer tool. And then you also get everything that's coming right here. Everything down here. Exclusive video content only for our subscribers. Everything, the chat community with all of our users. This is all available for only $1 per day. That's it. $1 per day. If you can just increase your gains by 1 or 2% or decreases your losses by 1 or 2% each year, this will lead to hundreds of thousands, if not millions in your portfolio at some point in the future when you retire. This is a no-brainer, $1 per day. You're locked in at the price. There are 2 ways to sign up. everythingmoney.com or Patreon. The benefit of everythingmoney.com is we're not large enough yet to charge a sales tax, so you get to save the sales tax for the time being. So again, guys, $1 per day gets you locked in, leads to hundreds of thousands, if not millions. No brainer, sign up.
Please remember that these prices do go up. You will lock in today if you join the community, but they do go up next month, so get with it now. If you want to trade in that beautiful BitNast Nation, headed up by Mo. He'll show you how to trade these 2 stocks right now. Right meow. Go ahead, Mo.
Guys, so I'm gonna show you Google and I'm gonna pull up Baidu, which I like more. So right now, this is about 260 number down here. This is the 200-day moving average. So if Google breaks below the 200-day moving average, you can short it. But remember, it's $2,700 stock. I would rather you go and trade Baidu. And it doesn't matter what you're trading. I mean, look where we are right now. We're starting to make that move towards the sweet spot. So it's not ready just yet. But if you start creating some engulfing candlesticks coming up and creating these W formations, you have some room to run with Baidu. I mean, you're going to be able to get to about 180 and then about 190. And who knows where you can go from there. I mean, the next resistance point's at like 210. So I would put this on a watch list for yourself. This is a very good looking stock right now. Very surprised. Very surprised.
If that intrigues you, join the BitNast Nation, and Mo will take you down the path of trading, which is incredibly exciting, Paul. You know that. That's our take on Google versus Baidu. We will certainly keep you updated. Join the community. See you next video. I love you.